Welcome to Real Estate in Real Time. I'm Woody Zimmerman here with Mark Skibowski of Remax Lakes. Welcome to the show.
Here we are, morning.
Morning, and summer is flying by.
Poor Lord.
It's been a busy summer.
Busy as all get out. For not just business, but personal.
Yeah, right. I mean,
it's been crazy.
I was down in Atlanta. You were in Chicago.
You're in Chicago.
Roger was in Florida. So we've just been all around.
We've been living the dream.
Yeah.
I got a good friend of mine. I went to graduate school. He works at Ford.
Yeah.
I mean, he is hilarious, but that's his standard thing. I picked that up in 1998. Living the dream.
Living the dream.
Living the dream. And I know a lot of people use it, but it's for him, it's been standard since then. So, living the dream. Can't complain.
Yep. So, summer is flying by, and we've got the 75th anniversary for WRSW coming up here.
Yeah, I've heard the promos. That's pretty cool.
Yeah.
75 years.
Yeah. So, third Friday of August, the theme is going to be the 75th anniversary.
Okay, sweet.
And actually, I'm pretty stoked about this because my band, the Dad Bods, we're going to be playing downtown. So it's going to be the first time that my band, the Dad Bods, play in Warsaw.
Interesting. So do I get any perks because I can come up and say, "Yo, dude, I'm with the band"?
Absolutely. You have to help me carry my drums.
I carry in your drums. No worries.
Yeah, but absolutely. So,
well, congratulations. Well, you're moving to Kosciusko County. You're moving to the big time.
Yeah, exactly. Yes, for sure. So that's going to be fun.
Well, that's cool.
Yeah,
that's really cool.
All right, how's the housing market?
So, we're looking backwards a little bit. So roughly half the year is, a little more than half the year is gone now. We're into August, right?
Yeah.
But the data that we received from the state Board of Realtors, they sent out a mid-year review, and it borders on or it duplicates the themes that we've been talking about is affordability and inventory are still major concerns. So what does that mean? Well, volume is down significantly statewide. Kosciusko County is down about 11% as far as volume, number of transactions that have taken place. So why is that? Prices are up. Interest rates are up.
Yeah, but Mark, everybody, I've heard it by so many people, there's going to be a crash. There is going to be a crash.
Yeah. Have we heard?
No.
Crickets.
Yeah, no.
Crickets.
Nothing.
Show me the crash. It hasn't happened yet. And
Right.
I'm not gleeful about that interest rates are where they are.
No.
But just economic conditions don't show that they are going to reduce anytime soon. The Fed raised rates again last week or so.
Yeah.
But just because the Fed raises rates doesn't automatically mean mortgage rates jump up the same amount.
Okay.
A lot of people have that, that's their thought process is, hey, the Fed raises, mortgage rates follow. There's a lot of things that go into those mortgage rates. Mortgage rates fluctuate minute by minute throughout the day.
Yeah.
Every lender has different rates, different programs, different this, different that.
Yeah.
But the reality is that Fed rate is what they charge banks to borrow money. So if the bank has to borrow money, they're paying a higher rate. Guess what? They're going to pass that on to the consumer.
Right.
So, overall, unemployment is still really good.
Yeah.
In the state, we're still in that 4%, 4.5%, which if I remember from years ago, full employment was 4%.
Sure.
That was the number they wanted to target for unemployment. Well, we're darn close to that full employment. What does that mean? People that really want to go to work.
Yeah.
There's still help wanted signs all over the place.
Oh, yeah.
So economically, I think we're still in great, condition.
Mm-hmm.
We've got the revenge travel stuff going on. People are traveling more than ever. Airline flights are ridiculously expensive. Inflation is beginning to get tamped down. That's really where that Fed rate is trying to drive inflation down, and inflation's pulling back a little bit. Do we see that at the gas pump? No. But do you see it in, eggs went up to like what, 5 something or another?
Oh, man.
A dozen, and they're back to more reasonable price. Milk is still the same price it's been for a long time.
Yeah.
So overall inflationary pressure is still there, which is why the Fed will continue to adjust rates. And believe me, I don't pretend to be an economist or an expert on the Fed, but how does it impact the housing market? People hear that stuff and they kind of get freaked out.
Mm-hmm.
Right? Well, should I buy a house? I don't know. Interest rates are high. We've talked about it ad nauseum.
Mhm.
Interest rates back in the 80s were 13, 14, 15, 16%. People still bought houses.
Yeah, I remember my parents talking about the interest rates
Right.
back then.
Right.
Just everything that happened, and then Reaganomics,
Yeah.
came along.
Right.
It's-
Sure. And when I bought in 2000, interest rates were 6.5%, 7%. So we're about that.
Mhm.
So for those who are considering buying, we talk, is it a good time to buy? I always go back to, why are you buying?
Mhm.
If you need a bigger house, if you'd like a bigger house, for whatever reason, if you're changing jobs, any of those things, buying a new house, it goes without saying, do what you have to do, right? If you
Yeah.
need a bigger house, you're going to buy a bigger house.
Yeah.
Doesn't matter what interest rates are. And that goes not only in Warsaw, that goes, nationwide.
Yeah.
So people are still in the market. There is still extremely strong demand. However, we're not seeing 10 and 15% price appreciation year over year,
Correct.
thankfully.
Yeah.
Because, even during that time, how does this continue? But
Right.
affordability and inventory are still the big topics for people to consider. Don't worry necessarily about the interest rates. And after the break, we'll talk about some things that buyers can do to prepare if and when mortgage rates do fall.
Okay, sounds good. You're listening to Real Estate in Real Time. We'll be right back. Welcome back. You're listening to Real Estate in Real Time. I'm Woody Zimmerman here with Mark Skibowski of Remax Lakes, and we're talking about, you just wrapped up a segment on like affordability and interest rates, okay? But you also talked about some things that you can do to prepare to buy when mortgage rates fall.
Yeah, so everybody's saying they're going to fall. Well,
Yeah.
all of the data that I see says we're probably going to be in that 6.5% to 7% environment for the near term. And near term to me is through the rest of this year.
Okay.
We may see some change into 24. Who knows? But we're not going to, let me say it again, we are not going to see 3% interest rates anytime soon.
Mm-hmm.
So I don't care that your friend got a 3% rate. I don't care that your mom got a 3% rate. The market doesn't care that your mom bought and has a 3% interest rate. The conditions today are what we need to deal with, right?
Sure.
So
Yeah.
if you want to buy, let's be real. If you want to buy, let's talk about some things that you can do to be ready to buy. Hope against hope that, the interest rates drop,
Mm-hmm.
but whether they drop or not, but to prepare for buying a home.
Yeah.
So first thing, get your credit score in order.
Yeah.
Right? If you are a poor credit risk, you're going to pay a higher interest rate.
No matter what.
No matter what. If you have a poor credit score, you are going to pay a higher interest rate. Not only a higher interest rate, you're going to pay more for homeowners insurance. You're going to pay more for car insurance. All of those things.
But when you check your credit score, that affects your credit score.
It can.
But how do you make your credit score better?
So, I don't pretend to be an expert on that. What I generally do is put people in touch with a lender and say, hey, you may not be ready today.
Okay.
Talk to this lender. They will guide you through the steps because they're experts in it.
Yeah.
They know.
They do it every day.
As we've talked about, I've said, hey, paying off a credit card, that should help my credit score. Well, actually, it can hurt your credit
I know.
score. Right?
Because I did it.
Yeah. I mean, it makes no sense.
Right.
It's nonsensical, but talk to the professionals. Just like if you're thinking about buying a house, talk to an agent, talk to a professional.
Yeah.
If you're thinking about financing and you've got credit issues, talk to a professional. Now, it doesn't necessarily have to be a lender. I know there's that commercial, Credit Karma, you can bump your score up, the purple cow or whatever.
Yeah, right.
You can bump your score immediately. Is that short term, long term? I don't know any of that. But the reality is, the better your credit score is,
Mm-hmm.
the better shot you're going to have of getting a good mortgage rate.
Okay.
So
Yeah.
improve your credit score.
Okay.
Improve your credit score. Second thing is save for a larger down payment.
Mm-hmm.
Save for a larger down payment. You can't believe the number of people that come in that don't have any savings, none,
Mm-hmm.
and want to buy a house. I get that. It's the American dream. I want to own a home. I'm paying, $1,400 a month rent. I should be able to afford $1,400 a month car payment.
Not necessarily.
I'm sorry, house
Or
payment.
house-
They
yeah.
do not transfer.
Correlate, yeah, no.
They do
Yeah.
not transfer. So save for a larger down payment, save for your closing costs. I just had a young couple that had saved the 3% down payment but needed closing costs.
Yeah.
They missed out on a house.
Oh.
There were 2 offers, again, still multiple offer situation. They missed out, and the agent told me the only reason we didn't get it is because they asked for the closing costs. So basically, you're starting, below ground.
Yeah.
You're starting at a negative.
Yeah.
When you do that. So save for down payment, save for your closing costs. You mean I have to be ready to buy a house? Yes, you do.
Yeah.
This is a long-term commitment. You're getting a lot of debt. You need to be ready for that. So save for your down payment, save for your closing costs.
Yep.
Doesn't mean we won't try to negotiate and things like that, but
Yeah.
when you buy a house, things are going to happen. Stuff's going to break.
Yeah.
You're going to need money to fix things. So start saving now.
Yep.
Start saving.
Good idea.
Okay, so when you go to write that first offer, and because you're ready to buy it, you've been pre-approved, you're not in a negative position having to ask the seller to pay some closing costs.
Right.
Okay? Improve your debt to income ratio. So what goes along with improving your credit score is paying off some debt. Now, not all, because you need to have those things. The Dave Ramsey School, which says have 0 debt. Well, you'll have 0 credit score.
Yeah.
Now you go to get a mortgage, you can't get a mortgage.
Yeah, you can't get money, right.
Some debt is good. Pay it on time. Pay it regularly. Because banks like to see that you've had debt and you've paid it off over time.
That's your track record.
That is your track record. That proves that you do what you're doing. So improve that debt to income ratio. Next thing is explore your options. There's all different types of financing options out there. And that's where the relationship with the lender is so important, because they can guide you to the best program for you. I get lots of people coming to me and say, well, I want to buy FHA or I want to buy USDA. I'm not the expert on that. Talk to your lender. They're going to know your credit. They're going to know rates. They're going to know other costs that are associated. They can guide you in the right direction.
Yeah.
So that's important, again, to have that relationship with a lender, just like a relationship with an agent. Talk to a lender. Have them guide you through to the best program that works for you.
Yeah, and you always stress local.
Yeah.
Because then you're working with the same person every single time.
You got it. And I guess the last thing, and we'll close on this, is, maybe talk to more than one lender. Just because Mark suggested, look for people that have worked with somebody before, because all lenders have different costs. They all operate differently. One of the first things that I tell buyers are, hey, if you're thinking about it, reach out to the lender. If they don't call you back in a day, there's probably a problem there. And I need to know about that, because I'll call that lender and say, hey, I sent somebody to you, didn't respond.
Yeah.
So responsiveness is important. Now, I'm not saying a 30-second response time, right?
Yeah.
You don't chase them down, but there is nothing wrong with comparing different lenders.
Well,
comparing.
and I would say start with your own bank. If you're comfortable with your bank, start with that bank, because it is kind of nice to have everything online, and you could just boom, 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 make the mortgage payment or whatever.
Work with somebody you know. Absolutely.
Yeah. Okay. All right. Some really good information. So we appreciate all that. Your contact information.
Sure. Website, skibowskiteam.com. Phone numbers 574-527-0660.
Okay. Very good. You've been listening to Real Estate in Real Time. Have yourself a wonderful weekend.